Welcome to the Measure Success podcast, where I talk with top leaders about effective strategies that inspire success. Very excited to have with us today Frank Milone. He is a founding partner of FML CPAs. They were with over 25 years of expertise in audit and advisory services, specializing in emerging companies and venture capital across various industries. They are a CPA firm, and Frank in particular is a CPA and from UConn, University of Connecticut. We've been talking in the other sessions about UConn basketball. He's also actively involved in supporting economic development initiatives and mentoring innovation programs in Connecticut. Frank, welcome to the Measure Success podcast.
Really appreciate you having me on the show.
You bet. So for one of the stories that I thought was interesting in talking with you is in kind of our side discussions we're having prior to the beginning of the podcast is you're working with the big company, the big firm, and you have this, oh gosh, do I want to go off on my own, right, and try something new? And you did that. You went from a large firm, Ernst Young, which was one, today now one of the top 4 public accounting firms in the U.S. And you decided to go off on your own, and that's a scary experience, right, for somebody to make that leap. Let's talk about that, because I'm super curious. Like, how in the heck did you get that comfort level of it's okay to take the big leap?
Yeah, it's funny. I never considered myself an entrepreneur, but listen, I love public accounting. I started in public accounting and I started at a national firm. I was really happy to be there. Drove a great career there. I was there 10 years, but at a certain point, working in a big company just didn't appeal to me as much as it did in the past. And there's a lot of factors for that. Me personally, opportunity to continue to progress was being limited by big company issues that I had very limited ability to control. National firms were regionalizing. They were becoming part. I was becoming part of bigger offices in New York or Boston, and I had very little control over aspects of my career that I thought I had earned the right to control. Mm-hmm. So, talking with a couple of other, members of the E&Y team, we decided we had some entrepreneurial spirit and we wanted to start a firm, and we thought we could do it better. We thought we could kind of create something that we used to have in the environment that we were working in. And we decided to do it. Now we had some, financial backing around us that helped, like most entrepreneurs, you need some access to capital to kind of get your business going. And we did it and we jumped. And I don't know if we ever truly understood the risk reward of doing it, to be quite honest with you, Carl. I think we were confident, we were motivated, we were hardworking, and we thought we could do it. And we had kind of a combination of audit and tax experience, and we just relied on our, our motivation and our hard work that we thought we can get it done. And, 22, 23 years later, I don't look back very often and look at my path. I just don't. I'm always so focused on the future. It will be interesting to talk it through, and it will be interesting to kind of reminisce about some of the things that were, good decisions, bad decisions, and why it was successful. So.
Yeah, for sure. And so it's interesting. I've taken the leap multiple times, and I remember, well, matter of fact, starting up this current company, I have 40/40 strategy. My wife was like, not again. She had this, don't do this again. And this was not a light conversation. She was not happy with taking this leap. I just come from a startup, going to another startup. Yeah. Prior to that, though, I had been with quote unquote a traditional corporate job that had great compensation. Yep. But I knew there was something ahead of me that had great opportunity. But you had to prove it, right? You had to prove that went from that. And the good news for you, you had a specific known talent, right? You have audit and tax, and there's a requirement. Yep. That's right. There's a requirement to do audit and tax. Yep. Some people go off and it's kind of an idea and they're not even sure if there's a market for it. When it's so interesting, like when you go off because once again, was it 3 of you or how many went?
Yeah, so 3 of us left. Yeah.
Yeah.
Together.
Yeah.
Yeah. So when we left together, the reaction to the firm was interesting. You have non-competes, so there are limits, right? You have non-competes that you sign at a certain level. We were very we're accountants, we're ethical, right? We wanted to play by the rules. We had a 1 or 2 year, I can't remember, non-compete at this point. And it's funny you mentioned your wife. The biggest, I remember when I spoke about this, one of the biggest things that I had going for me was my wife was so supportive of this process. I had one child on the way. um, what I thought, I was doing pretty well for myself after 10 years at a national firm. And my wife was working and she was so supportive of, go and do it. Like, this is your dream, go do it. And again, I don't know, and you would know, right? I don't know if that works if you don't have that cohesiveness within, the family unit to support the ups, the downs, the long days, and all of the uncertainty that comes around with it. But um, I'm not sure I answered your question. What was the question specifically that you had asked?
Well,
I mean, I think,
I think you did. I think you went through of just once again you were explaining that it
yeah,
is important, right, to have that balance and that partner with you that like no we're in because it's not easy, right? I said I initially started this with
yeah,
conflict, but fortunately I was able to prove. But it's still a path, it's still a journey, right? You still go through this, and
yeah.
you sound like you have some resources to help out, but at the same time, it's a lot different than the resources you had that you came from.
No, I mean, we started with nothing. What's interesting about, we went from one of the biggest firms in the world to setting up our own cubes and setting up our own office and trying to figure out a phone system. We didn't even know what a phone system was. I mean, let's be honest. I mean, you're insulated. I was a 22-year-old when I started at Ernst. I'm 32 years old. All I did was work in between, and now I'm trying to start a business, and we're doing it on the fly. And one of the things that we were really good at was understanding the fact that when you go from a lot to zero and you have limited resources to help you along the way with expectations of getting reimbursed for what they're providing you for those resources, classic. We just knew we had to drive revenue. And you make different decisions in how you approach your services and how you approach your aspect. And the world was changing. We did it in an educated manner. Like, the world back in '02 was different. Like, the national firms had just gone through Enron, and Anderson had just unfortunately, been been basically dissolved. And so the market had changed, and there was an opening that we identified for a regional firm to do really good technical work. But understand, we're building an audit and a tax practice, and those sales cycles are long and they take time. And oh, by the way, we just had an accounting firm, one of the biggest in the world, go under. And so there wasn't a lot of trust in new accounting firms. So we had to pivot our focus on being a consulting provider and doing different things to A, generate an immediate cash flow, and B, solve the problem that most people were dealing with. And when we started, that was internal controls and Sarbanes-Oxley, and that's what we became experts in. And that's how we built it. We started with something that we knew was needed in the market, and then we kind of built off that known quantity into the core audits and the core tax and everything else that we were trying to solve.
Yeah, and good for you because I that's interesting timing you had because I put in my last time I was with a publicly traded company. I implemented Sarbanes Oxley with it. That was my
Yeah,
last year with the organization. It was a bear. I mean, it was an absolute bear. And I actually very, at least at that moment in my life, and I followed through to date. I was like, I never want to work for a publicly traded company again because, but
yeah.
but the specialty, right, of knowing how to do it well, you were solving a real problem, right? Because it was
I mean,
completely different
the
to
the
what was
value
happening.
was there, right? I mean,
Yeah.
the regulation came in, companies had a set time frame to do it. It was a very internal control focused initiative that most companies didn't have the resources in house to do. We came out of an internal control focused audit environment. We knew what we were doing. I went to two or three of my old clients and basically was like, "We can help you implement this," and they were very open to the idea. A, because they knew us. B, because we were cheap. Quite frankly, we would do it for a lower cost point because all we needed to do was get paid weekly because we needed the cash flow to survive. So
Yeah.
we were experts. we figured it out, we solved the problem, and then we built relationships off that need. But those relationships were previously established that we had kind of coming out of a national firm.
But that's a great example of what I call a smart way to start a new business, right? Of, you had these realities of, boy, we don't have this back and we have these non-compete issues we're dealing with, but we're effectively providing a new
Yep.
product, if you
Yep.
may, right?
Yep.
Within a adjacent pool that we already understand, we have a group of people that this won't be considered, competitive with by
That's right.
definition.
Yep.
And then we can go out and actually get going, get started right away. And that's, um, I think that's such a valuable way, like, to start, because you go on your website today and you are providing tons of different
Traditional.
services,
Yeah,
right?
we're traditional. We're a traditional accounting firm. We were anything but the such when we came out. It's funny you mentioned that, and I don't know if we've ever really thought about it that way. We reacted to the market. The other thing we did was we inverted the model. Like, so
Mm-hmm.
most national firms, their model is triangle,
Mm-hmm.
and most accounting firms are triangle, where, you know, you have a lot of uh, younger staff and seniors, and then you grow, and the model, you eliminate some of those through just normal processes. We inverted that model.
Mm-hmm.
So what we did was we had the three partners, but then we hired a bunch of senior level people, like 5 to 8 year people underneath us, because we needed people that were experienced and could work independently. We couldn't spend a lot of time putting 4 or 5 people on teams. So we inverted the model, we attacked the market that was available, and then it gave us time to work through our non competes, which were respected immensely. And then we also built longer sales cycles. So we were building audit sales cycles and tax sales cycles that were longer, but doing that while we were working on the consulting revenue driving technique. And then eventually, over 3 to 5 years, that model kind of flips back into a more traditional model, which is leveraged. Now the margins increase, and now you're transitioning into a more mature, what I would say a mature model. And now you're focusing on revenue growth, but you're also focusing on margin growth and other aspects of driving a business. And that was done out of necessity
Right.
and instincts. I don't know how else to explain it. You do it based on reading the market, reacting to the market, focusing on 2 or 3 critical issues within your business growth, and then you adjust as strategically you assess and adjust as you kind of build that business through. I don't that's pretty the
No,
easiest way to look at it.
once again, it was interesting how you once again intuitively figured it out. But one of the advantages that small firms will always have, small to mid-sized firms, is you don't have a global corporate headquarters, right? You don't have a massive HR group. You don't
Right.
have all these requirements
Yeah.
that has to be covered and paid for in the fees.
That's right. That's right.
And so,
We were very what was the word? I was a nimble. We were
yeah,
very nimble in our approach. Yeah, I agree
right.
with that.
And
The other
because
thing we did was you know, we were very young. We didn't feel young, but we were. We were 32, right? And that's young. Most people don't think that's young, but that's relatively young for starting something from zero. And so our tagline was experience that counts.
mm,
Kind of a nice play on the youth and the accounting aspect. But my point being is we we took on the perception and the risk of the new accounting firm head on, and we also surrounded ourselves with what we called at that point gray hair advisors, people that were more experienced than us. And we use those people as almost like a pseudo board. Accounting firms don't have boards, they don't have board of advisors, but we created our own little board of advisor that we would lean on for confirmation of how do we approach this. This is what we think, but it's nice to have someone to bounce that off of. And that's how companies drive, right? Companies have boards of advisors, board of directors. We kind of created that on our own with people surrounding us that were just willing to help. And that I never forgot that. I'll be honest with you. That's why I'm so eager to help other companies solve problems, is because when you have someone that steps up and really adds value. And they don't need to do it. They're not getting paid for it. They're just doing it because they see the value in helping you get established. There's a commitment and a relationship there that drives a core fundamental value that I've never forgotten. And anybody who will talk to me who needs something, whether it's a student, whether it's a CFO in transition, anyone, it's like I go above and beyond the call of duty to get that person into a networked environment that I can help them with. It's fundamental to my core value for some reason.
Well, and it's probably a big reason why you grew is because at the end of the day you were serving and giving, right?
Yeah.
And it's often the most important characteristic of any organization, any company. I'm curious to this next question of when you first started,
Yep.
did you have a big vision? Did you have, you're once again, you're 20 years, and I think we in a previous conversation, we're like now we rival our size, right, of some of the
Yeah.
largest firms in terms of your office, right, and the number of
That's right.
people in an accounting firm.
Yep.
Did you envision that when you got this started, or were you just like, we're just going to try to make this work?
Yeah. I think we always had a plan that we wanted to be um, like a large independent firm, but the ecosystem of accounting firms when we started was different. So I don't know if we could have planned it. We just wanted to be. I'll kind of story to kind of demonstrate. When I left E&Y, the managing partner, who I was very close with, said, "You're gonna," he sat back in his chair and he's like, "You're gonna be doing shoebox audits," and I was like, I was insulted by that. I'd worked my tail off for 10 years, and there's a whole host of reasons why I left, but that was one of them. But my point being is that if you want to motivate somebody, you just tell them that they can't do it. And my
Yeah,
point was, we knew inherently that the market had shifted and that the national firms were going to focus on so much of the big stuff that was coming their way and the independence, right? Everybody was challenging. The firms were too close to their clients. Everybody needed to be independent. We knew the market was going to open up for emerging companies. We just knew it because back then, national firms were using very interesting billing techniques to get those clients. They would discount their fees and then they would do clawbacks upon an IPO where they would regain all their like those things are they're not allowed anymore. Right. So we were like, listen, I'm not going to be doing shoebox audits. I'm going to be doing your audits, the ones that you're not going to be doing anymore because you can't manage your cost infrastructure to price those audits out in a way that's profitable for you. And there's a ton of value to add into those companies, which is one of the reasons why we got totally engaged in the emerging companies practice, which no one was doing, Carl. No one was doing at a small firm level back then. In 2002, those emerging companies, venture capital, right, back companies, they were all audited by national accounting firms.
right.
So there were the big firms, and then there were really small firms that were doing mostly tax related work. We created an audit firm and a tax firm, and people thought we were crazy. They were like, "What are you going to audit? There's nothing for you guys to audit other than maybe reviews and compilations." So I don't know if we had the vision, but we knew the market was there. We knew we could attack a market that was becoming available because no one else could do it. The
Yep.
small firms weren't technically competent enough to do it, and that's not to say that they weren't good firms. They just weren't technically competent enough to do it, and the big firms couldn't do it anymore. So we just said, "We'll do it."
Yeah.
And we took that environment and we ran with it in Connecticut to say, and then eventually within the tri-state county, we said we want to be a primary player in that market segment. And that's not the only thing we do. Like the firm is a PCAOB registered firm. We do public companies, we do middle market companies, we do PE backed companies, we do small, we do tax and all. But my point was, we found two or three areas that we could drive value in, and then we just built off of that value. And so it was. People say, ask me if we got lucky. You don't get lucky,
Mm,
right? You and I both
yeah.
know you started a business. You get lucky by making really good decisions. That's not luck. So
Agreed. So I want to transition this to the current state of accounting firms because
yep,
I feel like if it already isn't happening, it's in process of another major shift.
Right.
For those, I'm sure that there's many people who are familiar with accounting firms, but those who aren't familiar with what's happening, could you talk about what's happening right now in the
Yeah.
CPA industry and accounting firms? 'Cause to me, it's really interesting.
Yeah, it's the market is interesting right now, right? So couple trends is one is less and less students are going into accounting. So let's start on the lower side. So the graduating rates for people in accounting majors has been decreasing for a number of years. So think about what I'm saying. So the supply of new accountants for those bigger firms and for our firms as we grow and we continue to grow is less. And then as a result of that, firms are having a hard time supplying themselves through just normal recruiting. So you add that to the fact that the bigger firms, are starting to grow through acquisition. So the M&A in the accounting industry is an immense trend right now. So firms are getting acquired into bigger firms at a very rapid rate. We are actually acquiring smaller firms now to help fund our growth. Any business, as you know, grows through organic growth and acquisition growth. So we're growing organically very healthily, but we're also growing through acquisition, and we do that to supplement revenue growth, but also to supplement people because we can't hire as many people as and find as many people. So the trending is M&A through the larger firms acquiring firms like maybe not the big four, but the second tier nationals and the other firms. And then there's a very large trend where private equity is now in the market and they're creating roll-ups of accounting firms through the acquisition model. So they acquire a platform firm and then they will acquire multiple firms underneath that. Anybody who's familiar with the equity industry knows what that means. So that's creating a lot of opportunities for firms if they want to um, maybe fund retirement or get immediate payouts in an industry where that's not normal. Normally people who retire from accounting firms are getting paid out over time, right? And that sort of thing. And now private equity is overvaluing accounting firms. Valuations are high, and they're creating an immediate exit and an immediate ability to get your value more on an immediate basis, less over time. So it's an interesting time.
So I think I do a lot of work with PE firms, and
Yep.
the roll ups right of PE has been happening across so many different industries, right? It's this really fascinating trend. Exactly what he says. There's this desire. I find a platform that we feel like is pretty good. We roll everything into that, and then of course we sell it to the higher PE firm after that. And so forth, right? So you have this massive financing game going on.
Yep.
You have retiring CPAs, like you said, that are, hey, this is great. I can get 5 or 10x now versus waiting over 5 years of uncertain right revenues, right? And
Correct.
so
Yeah.
so they're making these decisions that's makes sense, right, for them as an individual to help go towards that. But what I see, whether it's in accounting or in plumbing or in construction, that the finance game ends up the loser is often the client,
That's right.
right? The client at the end of the day is not giving the service. Like what I hear when I'm in the market, I hear about I can't get my accountant to answer the phone call because of the shortage that you were mentioning, right? We have retiring on one end, we have the retiring CPAs on one end, and then we have
Yep.
less people coming in.
Yep.
And then, of
Yep.
course, you have what part of the trend, right, is to offshore, which, of course, there's a lot of opportunities to offshore, but you still have this how do you client service in the US with existing clients where the market actually is.
Right.
What opportunities do you see there, right, of this, what I call the dissatisfied client,
Yeah.
right, at the end of the day that's happening?
It's so this trend, as you know, normally the trend of PE getting involved is more recent, but the M&A trend has been happening over 10 plus years. So here's our business model with it, right? So we are committed to being an independent firm as much as people around us are really interested by that because short-term thinking would be maximize value, sell, right? You've grown a business, maximize sell. our value has always been long-term focus. So as the M&A opportunities have happened above us as a growing firm, M&A had always happened above us. We just slot ourselves into that market segment, and basically for all the clients that they shed and don't want or can't afford to keep because the pricing goes up and up as they go in, we just basically create a really important solution for those companies that don't have now an option to be in a really talented firm that provides really good service at a reasonable price point. So we would take advantage, we're taking advantage of the M&A activity by not getting acquired
Yeah.
and just following the M&A trend right up and just continuing to service our clients and build a bigger, get access to bigger and bigger clients as the M&A happens. And you know, if you go back on you've been on our website. Our value based, it's a service based value. We are a value based firm, a service based firm, and a problem solving firm. Everything else takes care of itself. If you add value to your relationships, the fees and the structures and all that stuff that people worry about constantly, those things don't, they're not pain points.
Right.
Those people will pay for relationships that add value, a fair price. And if you are providing a really good, valuable service, solving problems and adding value and not just a compliance check mark, you will get paid a fair number. And so we focus on building a relationship and building a brand that's focused on adding value. And to do that, you can't add value unless you have something to add, right? So you have to be extremely technical. You have to be extremely focused on customer relationships and customer service. Like, we get emails in all the time about new development. I respond to those emails, forget about 24 hours. I respond to those emails within an hour. And
Mm-hmm.
people are amazed at that. I'm like, this is the fundamental growth concepts of my business, right? I have to solve that problem for those people. I have to be a value-based provider. So in essence, the market, there's two ways to take advantage of it. If you're not positioning yourself to be independent, and that requires investment in resources, planning, maybe not having short-term thinking, having longer-term thinking in the form of building people, building a structure, building an environment, then you basically have one option when you get to a certain point, and that's to sell to a bigger firm or to a PE firm. Um, and unfortunately, there's a lot of smaller accounting firms that just haven't planned for a transition or an exit, so they are forced into a sales concept
Right. Yeah.
where if we want our strategy and our focus has been for the last 3 years, and now for the strategic plan we just developed for 5 years, is how do we maintain our independence. So all of our strategic thinking, all of our strategic planning, all of our operating plan, all of our hiring, everything is driven on maintaining independence. Because if we maintain independence, and if somebody wants to come in and offer us a huge number, okay, but that's not what we need to do. So we will value it based on what the equity partner group and what the partner group wants to do in the long term, not on a short term decision.
Yeah. Yeah. I think that long term focus is, and I would say this for any industry, but it's really in particular in accounting. If you can have that, let's create an oil well
Yep.
approach, right? Where we don't have to sell.
That's
We're,
right.
we're building this way that we could go, yeah, if someday somebody comes across and gives us stupid money,
Yep.
20x,
Yep.
some valuations, like, okay, we have an obligation to get out, right? Because those things don't happen every day. You think of every bubble, right? There's always a point when somebody gives you an offer, but a price you just can't refuse. But at its core, if you maintain it, creating that oil well doesn't just create today's wealth, it creates generational wealth. It creates this opportunity to continue to expand the entity beyond what it is. And I think it's an interesting decision for any entrepreneur of whether they make that decision of how they go to choose. Are they going to create an oil well, or are they going to create a company to sell? And
That's right.
that decision, I think, is
Most,
super important.
and you talk about that. We always talk about this a lot because our companies tend to get venture capital investors, and then they tend to be bigger venture capital investors as they grow and mature. Um, And everyone's initial thoughts are the bigger the venture capital firm, the better, because access to more cap. And you and I both know, you know, it's not about the check size. It's about what are they bringing with the check, right? How are they going to be in the boardroom? How are they going to advise you when it's not all rosy, when the market changes and you need to pivot and you need to make adjustments? Are they going to be patient, or are they going to immediately force you into a sale to maximize their value or to protect their investment?
Sure.
Those sorts of decisions over the last 12 months have been harder to make because the access to capital has been less in this market environment over the last 12 to 24 months. So people have had to make decisions on who they're going to allow to get into the cap table based upon just need. We need capital. So it's going to either be high cost capital, right, or capital with people that maybe don't have the longer term vision for the company that they do. And that creates challenges because once you have a challenge in the boardroom, unfortunately, those decisions start coming into focus a little bit clearer. And so
Yeah. Yes.
that's really an important concept when I'm dealing with a lot of my growth companies, which is understand what you're doing in the form of capital. And it's not just about the capital, it's about what it brings into the boardroom and how is that going to impact your vision for the company, because it's not your company anymore, it's their company as well.
Oh,
So
yeah. You just said something really important there that I think is 100% misunderstood by most entrepreneurs who take money in, is
yep.
that even if you have theoretically majority, if there is a covenant that's built into the preferred debt or preferred equity or
Yep.
preferred debt, if that triggers, you are no longer in control.
That's right. Yeah. It's we do a lot of work with incubators and smaller companies that are going through this for the first time, student entrepreneurs that come out of universities, and scientists that are forming companies for the first time. And um, one of the things I love doing is educating people on their first understanding. And we don't do it all on our own, right? Legal is a strong provider of these services, but understanding what the provisions mean within the preferred stock agreements when they see them for the first time. Someone who's gone in educated has a hard time understanding some of those provisions. If you're not educated or finance savvy or understanding of certain terminologies, you can get yourself in a world of hurt by not understanding and not having the right experts around you when you form your company. And the legal aspects are super important, the accounting aspects, the tax consequences of making those decisions early on cannot be reversed.
That's right.
So I've talked to a lot of people who get engaged, and one of the things we talk about is they're like, well, I'm gonna have this. My dad or my family has this accounting firm or this lawyer that does good work, and they're cheap and they're inexpensive, and it's educating them to say, listen, there are various lawyers that do really good work in certain industry segments, but if they don't do work in this industry segment, you're really putting yourself at a risk that you're going to miss an opportunity to position the financing round in a way that's best suited for you, and understanding that. And so we do a lot of mentoring and advising for companies that say, to just make sure they're aware that they're really important decisions that get made when your company is really small that are going to impact you about 4 or 5 years down the road.
Yeah, you just one more minute here of question of, if you're, once again, you just get a great set of advices. Once again, is make sure you get the right advice when starting up a new company. But just from a pulling back from it, what's another key thing that you're consistently talking with young entrepreneurs, or lack of experience, as you call it, entrepreneurs who are getting into the game for the first time? What's two or three like key things you're like, make sure you do these two or three things
Yeah.
to increase your likelihood of success?
Well, I think the first one is what I just said. It's surrounding yourself with the right advisors early, and the right advisors. People are like, well, that means you're surrounding themselves with you. I'm like, no, that means you're surrounding themselves with people who are experienced in their their type of company. And there's a lot of accounting firms that do this work now, and there are a lot of legal firms. But finding the relationship that matters, that can provide you with advice at the right price point. There are a lot of firms in big cities that work with entrepreneurial companies that unfortunately will defer fees and create huge liabilities for fees. And that, firms don't need that. There's really good boutique firms and smaller firms that are really experts in there. So surround yourself with the right firm, and you have to decide what that is. On accounting, legal. Um, the other one we talk about a lot is, um, don't misunderstand the importance of your financial discipline early in because again, we're
Mm,
accountants, right? So they don't respect um, organized approaches to creating their bookkeeping and accounting and their financial reporting. We've talked about this in the past. They don't understand the value of outsourcing certain roles early so that they have CFO type people around the table to help them make really strategic decisions, especially if they're young or in a discipline like a science discipline and they don't have any understanding of that. It also allows them, if they do raise capital, to have someone on their side of the table that understands and can counteract some of the advice that, or challenge some of the advice that's coming out of the boardroom in a more educated fashion. Um, those are probably two areas that we focus on. And then, the other thing we try to tell them is we give a lot of advice surrounding financial and tax consequences for certain decisions they're having to make, whether it's financial decision, fundraising decisions, operational decisions, growth decisions. And all we say is don't you make a determination as to what you want to do, you understand the consequences both financially, legally, operationally, and you make the decision based on what's best for the company. But you need to understand that there could be a consequence to your action, but that consequence doesn't necessarily mean that it's the wrong action. It just means that you're going in and making educated decisions as you grow your company through that process. That's probably the early stage concepts that we talk about the most.
Frank, this has been absolutely fantastic to have you on the show today. Thank you so much for contributing. How can people learn more about you and your firm so they can get in contact with you?
Yeah, that's great. The website, FMLCPAs.com, is always a great start. I'm on LinkedIn, and I consider myself a relatively active LinkedIn user, and that's always a great way to get in touch with me. Um, so those are probably the two best methods if they want to learn more about what the firm's doing, our expertise, and what me individually and how I kind of give back to the ecosystem that I'm working within.
Perfect. Hey, Frank, thank you so much for being part of the Measure Success podcast today.
Thanks, Carl. Really appreciate it.
To everyone who's listening, the reason why we get these great guests is because of you, the audience. Encourage you to like, share, and once again, what Frank is doing with his firm with FML has been absolutely fantastic. I encourage you to go out to their website to get greater insights into how to run your business better. As we always like to say on the Measure Success podcast, wishing you the very best at measuring your success. Have a great day.
Thanks, Carl.